Hello everyone. Welcome to the channel. Today, we're delving into one of the most astonishing milestones in business history. Nvidia became the first publicly traded company to surpass the $5 trillion market capitalization mark. That's right, on October 29, 2025, Nvidia's stock closed at $207.04, bringing its valuation to an impressive $5.03 trillion. If you're an investor, a tech enthusiast, or simply love watching underdogs rise to become giants, this story is for you. We're talking about a company that started in a garage, betting big on graphics chips for video games, and is now driving the AI revolution that's transforming the world. Let's analyze how Nvidia got here, the key decisions that fueled this meteoric rise, and what it means for the future of the economy. First off, let's put that $5 trillion number in perspective because it's hard to wrap your head around. The entire US stock market is worth about $55 trillion, so Nvidia alone now represents nearly 9% of the S&P 500. That's more influence than entire sectors like energy or consumer goods. Compare it to global economies. $5 trillion is bigger than the GDP of Japan, Germany, India, and the UK combined. It's larger than the total value of the cryptocurrency market at its peak in 2021. And get this, Nvidia's market cap now eclipses that of Microsoft and Apple, the previous frontrunners, both hovering around $4 trillion. This isn't just a stock surge, it's a testament to how artificial intelligence has become the new oil of the 21st century, and Nvidia is the refinery everyone depends on. To understand this ascent, we have to go back to Nvidia's roots. Founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Preem in Santa Clara, California, the heart of Silicon Valley, the company started with a simple mission: make better graphics for computers. Huang, a Taiwanese-American engineer who immigrated to the US as a kid, saw potential in parallel processing. Back then, computers were clunky, and video games like Doom were pushing the limits of what CPUs could handle. Nvidia's breakthrough came in 1999 with the GeForce 256, the world's first GPU, or graphics processing unit. It wasn't just for gamers, it revolutionized visual computing. The company went public that same year at $12 a share, but its early valuation was modest, around $10 billion by 2015. Investors saw it as a niche player in gaming hardware, competing with AMD and Intel. Little did they know, those GPUs had a hidden superpower: they were perfect for handling massive datasets in parallel, which is exactly what AI training requires. The turning point came in the mid-2010s when Nvidia pivoted hard toward AI and data centers. Huang had been preaching about accelerated computing for years, but it took the deep learning boom to make it mainstream. In 2012, researchers used Nvidia GPUs to train AlexNet, an AI model that crushed image recognition competitions. Suddenly, tech giants realized GPUs could speed up machine learning by orders of magnitude compared to traditional CPUs. Nvidia capitalized with CUDA, its software platform that lets developers program GPUs for general-purpose computing. By 2016, the company was supplying chips to self-driving car projects, like Tesla's Autopilot, and cloud providers building out massive server farms. But the real explosion hit in late 2022 with the launch of ChatGPT by OpenAI. Overnight, AI went from a buzzword to a must-have. Companies scrambled to build their own models, and guess what? Training something like GPT-4 requires thousands of GPUs running for months. Nvidia's H100 chip, released in 2023, became the gold standard. Each one costs up to $40,000, and demand outstrips supply by a mile. We're talking about a market where hyperscalers like Amazon Web Services, Microsoft Azure, and Google Cloud are pouring hundreds of billions into data centers. Meta alone plans to buy 350,000 H100s. Even Elon Musk's Shy is a big customer, using Nvidia hardware for Grok models. By 2024, Nvidia controlled about 90% of the AI chip market for servers, leaving competitors like AMD's MI300 and Intel's Gothi in the dust. Let's look at the numbers that tell the story of this meteoric rise. In June 2023, post-ChatGPT frenzy, Nvidia crossed $1 trillion in market cap for the first time. It was the fastest company to go from $100 billion to $1 trillion, taking just 8 months. By February 2024, it hit $2 trillion amid surging data center revenue, which jumped 400% year over year. The Blackwell architecture, unveiled in March 2024, promised even faster AI training, up to 30 times more efficient than the H100. That hype pushed it to $3 trillion by June 2024. Then came the geopolitical winds. In July 2025, under the new Trump administration, Nvidia secured approvals to resume limited sales to China, which had been restricted due to US export controls on advanced chips. China represents about 15% of Nvidia's revenue potential, and analysts estimate this deal could add $50 billion in orders. Shares spiked 20% in a week, vaulting the company to $4 trillion. The final push to $5 trillion came from the GTC 2025 conference in October. Huang, in his signature leather jacket, announced a backlog of $500 billion in orders for Blackwell and the upcoming Rubin chipset for 2026. Partnerships rolled in: Uber for autonomous vehicles, Eli Lilly for AI-driven drug discovery, and Nokia for 6G networks. The US government committed to 7 new supercomputers powered by Nvidia tech for national security and research. Revenue projections for fiscal 2026? Over $200 billion, with gross margins north of 75%, insanely profitable compared to traditional chipmakers. Wall Street ate it up. Goldman Sachs raised its price target to $250, citing unprecedented demand in sovereign AI, where countries are building their own AI infrastructure. Now, what's driving this beyond the tech? It's the broader AI economy. McKinsey estimates AI could add $13 trillion to global GDP by 2030. Nvidia isn't just selling chips, it's enabling everything from personalized medicine to climate modeling. In healthcare, GPUs accelerate genomic sequencing. In finance, they power algorithmic trading. In entertainment, they create hyper-realistic CGI. And with energy demand skyrocketing, data centers could consume 8% of US electricity by 2030. Nvidia's energy-efficient designs give it an edge. But it's not all smooth sailing. Critics warn of a bubble. The IMF flagged AI stocks as overvalued, and if the hype cools, like if AGI doesn't arrive as fast as promised, Nvidia could face a correction. Supply chain issues, from Taiwan's TSMC fabs to rare earth metals, pose risks. Competition is heating up too. Amazon's Trainium, Google's TPUs, and startups like Grok's own chips could nibble at market share. For investors, Nvidia's journey offers timeless lessons. First, bet on paradigm shifts. Huang invested in AI when it was fringe, turning a gaming company into an AI powerhouse. If you'd put $1,000 into Nvidia stock in 2015, it'd be worth over $440,000 today, a 44,000% return. Second, understand moats. Nvidia's ecosystem, CUDA for deep learning, Omniverse for simulations, is sticky, switching costs are high. Third, diversify. While Nvidia's up 1,300% since late 2022 and 50% in 2025 alone, no stock is invincible. Look at the dot-com bust or more recently, the crypto winter. Still, with analysts forecasting $300 billion in annual revenue by 2027, many see more upside. What does this mean for the US economy? Nvidia's success underscores America's tech dominance, but it also highlights inequalities. The Magnificent Seven tech stocks, led by Nvidia, have driven 60% of S&P gains in 2025, widening the wealth gap. Jobs in AI are booming. Demand for chip designers and data scientists is up 30%, but automation could displace millions in other sectors. Policymakers are watching. Antitrust scrutiny on big tech is rising, and there's talk of subsidies for domestic chip manufacturing via the CHIPS Act. In the end, Nvidia's $5 trillion milestone isn't just about one company. It's a signal that AI is here to stay, transforming industries faster than the internet did. Whether you're buying shares, learning to code AI, or just watching from the sidelines, this is the story of innovation paying off big time. If Nvidia keeps executing, who knows, $10 trillion by 2030. Stranger things have happened in tech. Thanks for tuning in. If you enjoyed this deep dive, hit that like button, subscribe for more economic insights, and drop a comment. Would you invest in Nvidia at these levels? Or is it too late? See you next time.